Dollar softens ahead of contentious Fed decision. The US dollar edged lower on Monday as global investors braced for a highly anticipated and potentially divisive Federal Reserve meeting later this week. Central bank bonanza. The Fed's decision on Wednesday headlines a busy week for central banks, with policy meetings also scheduled in Australia, Brazil, Canada, and Switzerland. While a quarter-point rate cut from the Fed is nearly fully priced in, the other major banks are expected to hold rates steady. The hawkish cut scenario. Analysts widely expect a hawkish cut where the Fed lowers rates but uses its statement, economic projections, and Chair Jerome Powell's press conference to signal a high bar for further easing. This could ultimately support the dollar if it convinces markets that future cuts in 2026 will be limited. High risk of internal division. The meeting is expected to be contentious, with a high risk of dissents from both hawkish and dovish Fed members. Such internal disagreement, which has been rare in recent years, adds uncertainty to the policy message. Global currency moves. Euro gained slightly to 1.165 to dollars, supported by rising bond yields. A European central bank official suggested the bank's next move could even be a rate hike. Australian dollar briefly hit a 2.5-month high as strong economic data has led markets to price in a potential rate increase by the Reserve Bank of Australia as soon as May 2026. Yen and sterling held steady against the dollar. Market positioning. Despite the dollar's recent decline, speculators have built their largest bullish bet on the currency since before the late October Liberation Day tariff announcement, indicating underlying confidence in its strength amid a resilient U.S. economy and persistent inflation.